Every car insurance coverage explained and the hidden costs they don't tell you about. Liability coverage. Think of liability insurance as your legal entry ticket to the road, but also your financial shield when you're the one who messes up. This one's non-negotiable in most states. If you want to legally drive your car, you're going to need it, and for good reason. Liability coverage is what helps pay for the damage you cause when you're at fault in an accident, but it's split into two parts, and here's how that works. Bodily injury liability. First, there's bodily injury liability. This covers medical expenses, lost wages, and other costs if you hurt someone in an accident. It doesn't just cover you, the driver, but also your family members if they're driving your car or even someone else's car with permission. Accidents can get expensive fast, especially if someone gets seriously injured. That's why experts always say don't just settle for the state minimum coverage. A single ER visit can wipe out $25,000. Imagine if you hit someone in a luxury car or a packed SUV. If you've got a house, savings, or anything else worth protecting, it's better to have more coverage than to wish you did after an accident. But here's what insurance companies don't tell you about bodily injury liability coverage levels. Most companies offer it in what's called split limits, like 25/50/25, which means $25,000 per person, $50,000 per accident for bodily injury, and $25,000 for property damage. But they also offer combined single limits, like $100,000 total per accident. Here's the kicker. Combined single limits often cost less than split limits for the same total coverage because the insurance company has more flexibility in how they pay claims. The minimum coverage in some states is as low as $15,000 per person. That might sound like a lot until you realize that the average cost of a serious car accident injury is over $57,000. If you cause an accident that seriously injures someone and your coverage maxes out at $15,000, guess who's responsible for the remaining $42,000? That's right, you personally. They can come after your house, your savings, even garnish your wages for years. Property damage liability coverage. But what happens when you accidentally hit something that isn't another car? Well, that's where property damage liability coverage comes in. If you or someone you allow to drive your car accidentally smash into another vehicle, a fence, a building, or even a streetlight, this coverage helps pay for the repair or replacement costs. It's easy to forget how expensive things like that can be until you actually knock one over. Here's a real-world example that'll shock you. A driver in California accidentally crashed into a Tesla Model S Plaid. The repair bill? $73,000. His property damage coverage? The state minimum of $5,000. He's now paying $68,000 out of pocket, plus legal fees. And while some states only require as little as $10,000 in coverage, trust me, that won't go far if you crash into a luxury car or a storefront. Most insurance companies offer property damage coverage from $10,000 all the way up to $500,000 or more. That's why it's smart to go for more coverage than the bare minimum. A little extra can save you from a massive bill later on. Medical payments coverage and personal injury protection. Now let's talk about what happens if you or your passengers get hurt.